Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. France has drawn a hard line in the sand for prediction markets. Authorities have ordered internet service providers to block Polymarket, citing strict gambling classifications. This regulatory precedent shifts prediction markets from financial gray areas into the realm of explicit bans. It signals a broader European crackdown on unregulated betting platforms that operate outside traditional financial oversight. Meanwhile, the secular Supercycle thesis is gaining traction among institutional investors. Gold, silver, and copper are surging on structural drivers that extend far beyond cyclical demand. Sovereign debt burdens are forcing central banks to diversify reserves away from fiat currencies. Simultaneously, chronic underinvestment in mining capacity meets explosive electrification demand. This convergence is creating a supply-constrained environment for hard assets, fueling a bull market that many analysts believe is just beginning. On the macro front, the U.S. labor market tells a tale of two economies. While the economy added jobs for 4 consecutive months, a staggering 2 million Americans remain long-term unemployed. This persistent structural weakness suggests the labor market is not as resilient as headline numbers imply. For crypto markets, this duality creates volatility. Investors are watching closely to see if the Federal Reserve will prioritize inflation control over employment support, given the lingering fragility in the job sector. Geopolitical tensions are further complicating the outlook. U.S. strikes on Iranian civilian infrastructure have collapsed recent peace deals, signaling a prolonged conflict. The threat to the Strait of Hormuz looms large, potentially disrupting a significant portion of global oil supply. This escalation threatens to reignite global inflation, complicating the path for interest rate cuts. Energy stability is no longer a given, it is a variable that could spike costs across every sector. In corporate news, Netflix plunged 7.3% to $68.95 amid intensifying regulatory scrutiny. Wall Street's favorite streaming giant is facing heightened government pressure, raising serious questions about its future growth trajectory. This drop reflects broader investor anxiety about regulatory risks facing large-cap tech and media companies. It serves as a warning that even dominant players are not immune to political headwinds. Looking ahead to today's release, the economic calendar is notably quiet. There are no major high-impact releases scheduled in the next 36 hours. Traders are likely to focus on geopolitical developments and crypto regulatory news rather than macroeconomic data. The absence of key indicators means market moves will be driven by sentiment and external shocks rather than fundamental data revisions. That's your market briefing. Follow Rumour with AI for daily market intelligence.